Hello, everyone. Welcome to a new episode of News Interpretation of Blockchain. In today's program, we will continue to bring you the latest, hottest, and most valuable news from the crypto world. From macro policies affecting the market to the latest trends of mainstream currencies and in-depth analysis of industry hotspots, we strive to help you grasp the most comprehensive market pulse in the shortest possible time. Now, let's take a look at today's headlines. First, let's focus on two major news stories from the U.S. market. The U.S. Securities and Exchange Commission, SEC, recently updated its staff guidance, making significant adjustments to the accounting rules for USD stablecoins. The new guidance clarifies that if USD stablecoins include guaranteed redemption mechanisms, they can be classified as cash equivalents. This policy is seen as a crucial step in SEC Chair Paul Atkins's push to ease restrictive policies and modernize crypto regulation. Previously, the SEC had clarified in April that certain covered USD stablecoins were not securities and did not require issuer registration. This initiative is considered part of Project Crypto, a broader effort to bring U.S. financial markets on-chain. This is undoubtedly a significant positive development for stablecoin compliance and future growth, providing a clearer path for institutional capital entry and signaling a more important role for the U.S. dollar in the digital economy. Following this, major news also came from President Trump, who is reportedly preparing to sign an executive order to penalize financial institutions that engage in debanking crypto firms. The order aims to address a persistent issue in the crypto industry, where U.S. correspondent banks have often refused to process transactions related to digital assets for political reasons. This executive order could impose monetary penalties and other forms of discipline on banks that discriminate against crypto. These measures indicate that the Trump administration is committed to positioning the U.S. as a leader in the global digital asset market and providing a clear regulatory framework for the crypto industry. This is undoubtedly a strong boost for crypto businesses, helping to alleviate the long-standing banking service challenges faced by the industry and promoting the integration of the crypto economy with traditional finance. Next, we turn to the latest movements in mainstream cryptocurrencies and market hotspots. After setting a new all-time high of over $123,000 in mid-July, Bitcoin is now in a technical correction phase. Its price has fallen by nearly 4% over the past week, currently trading around $113,000. More notably, Bitcoin's implied volatility has dropped to its lowest level since October 2023, suggesting that options traders are not rushing for hedges, and the market is gradually mimicking the stable bull market pattern seen on Wall Street. Despite short-term market weakness, analysts view this as a technical correction and predict that if historical patterns hold, Bitcoin could rally back to its previous peak in the fourth quarter. However, the recent negative turn in Bitcoin's Coinbase Premium Index indicates weaker buying pressure from U.S. investors, which might suggest a need to wait for a recovery in spot demand before a sustainable uptrend emerges. Ethereum's price has been consolidating sideways for the past 5 days, currently trading around $3,600, a drop of more than 4% from last week. While Ethereum briefly surpassed the $3,700 resistance level, it faced selling pressure near the $3,750 mark. Technical indicators suggest potential downside risk for Ethereum in the short term. However, analysts at Binance propose an interesting perspective. Ethereum's design may be making it a more attractive store of value than Bitcoin. They point out that Ethereum's transition from proof-of-work, POW, to proof-of-stake, POS, has led to its inflation rate turning negative, meaning ETH's supply is decreasing, contrasting with Bitcoin's fixed, but still increasing supply. Furthermore, Ethereum's staking rewards and more flexible governance model are making it increasingly popular for institutional digital asset treasuries, DTS. This shift suggests that Ethereum's narrative is evolving from merely a world computer to digital gold, with significant long-term value potential. XRP's price fell by 4.2% following a high-volume trading session, dropping from $3.06 to $2.93. In this sell-off, $3.04 was established as a short-term resistance level, with $2.93 becoming the local support floor. Analysts believe that unless the price can reclaim the psychological level of $3 with strong volume, the downside risk will continue. However, in the Asian market, XRP is experiencing strong institutional interest and infrastructure development. DAX, a Korean crypto custodian, has started offering institutional custody support for XRP, strengthening its partnership with Ripple. Simultaneously, Japanese financial giant SBI Holdings has filed applications for 2 new cryptocurrency ETFs, one of which focuses on XRP and Bitcoin. These moves indicate that despite short-term price pressure, XRP's institutional adoption and regulatory acceptance in Asia are steadily increasing, which is a positive signal for its long-term development. Dogecoin, Doge, shed 5% in a 24-hour period, with its trading volume quadrupling the daily average, causing its price to break down below the key support zone of $0.205. This decline is linked to institutional outflows from crypto-linked ETFs and broader market risk aversion driven by geopolitical tensions. Doge's sharp volatility once again reminds us that while the memecoin market offers speculative opportunities, it also comes with immense risks. Its price is significantly influenced by sentiment and external events, lacking strong fundamental support. For investors, it is crucial to remain highly cautious when participating in such assets, strictly controlling positions, and avoiding blindly chasing pumps or panic selling. The Layer 2 network base experienced a 33-minute outage this Tuesday because a backup sequencer was not properly set up to process transactions. Although the downtime was brief, the incident highlighted Base's reliance on centralized sequencers, which can create a single point of failure when handling transactions at scale. However, some cryptocurrency experts are optimistic, arguing that only blockchains with actual users draw attention for downtime, with some even calling it bullish downtime. Base's head of engineering stated that the team is working to harden its systems to prevent similar incidents in the future. Notably, this was Base's second outage since its public launch last September. This indicates that while L2 networks pursue scalability, they still need continuous improvement in decentralization and stability. In the memecoin space, Solana is facing a strong challenge from Base. Recently, the number of new tokens launched on Base surpassed that of Solana. Simultaneously, the launch of the Coinbase-incubated Layer 2 project, Base App, is accelerating its progress in decentralized social media and tokenization, which further intensifies this rivalry. This competition is not just a battle of technical capabilities, but also a contest of ecosystem attractiveness and user activity. For investors, keeping an eye on the latest developments in the memecoin ecosystems of these two platforms might reveal the next market hotspot. An analyst has pointed out that a surge in altcoin deposits on the Binance cryptocurrency exchange could be a leading indicator for a market correction. Data shows that as the largest exchange by trading volume, peaks in Binance inflows have frequently preceded downward price movements or market pullbacks. This suggests that investors are depositing assets onto the exchange in preparation for selling before market volatility. It's notable that during the recent market drawdown, only Binance saw a significant spike in inflows. This provides valuable early warning signals, reminding investors to exercise caution when observing large capital inflows to exchanges and to be wary of potential selling pressure. CryptoQuant has also shared 2 new indicators for tracking smart money movements. One is the average order size, which distinguishes between the size of normal orders and big whale orders in futures trading. The other is retail activity through trading frequency, which identifies periods of overheated activity from small-scale traders. Data on Gala shows that peaks in retail interest coincided with price highs. This reminds investors that excessive market euphoria often signals a price correction. In stark contrast, while the overall market performance has been soft, institutional capital inflows remain strong. The state of Michigan retirement system has significantly increased its holdings in the ARK-21 shares, ARK-B, Bitcoin ETF, with its stake growing to 300,000 shares, valued at approximately $10.737 million. Concurrently, the State of Wisconsin Investment Board disclosed a $321 million Bitcoin exposure through BlackRock's iShares Bitcoin Trust, IBIT, and Grayscale's Bitcoin Trust, GBTC. This indicates that Bitcoin ETFs are becoming a crucial entry point for institutional investors into the crypto market, driving continuous institutional capital inflows. This ongoing positioning by smart money and institutional capital may signal a long-term bullish trend for the market, but excessive short-term retail participation still warrants caution. The total stablecoin market capitalization is approaching $275 billion, marking its seventh consecutive month of growth. Notably, Ethereum's USD market cap has surged by 75% since mid-July to reach $9.5 billion, making it the third largest stablecoin, primarily driven by attractive yields ranging from 10% to 19%. Increased stablecoin inflows are often seen as a signal of new fiat entering the crypto ecosystem, which could foreshadow further market volatility as traders exchange fiat-pegged assets for other tokens. However, high yields can also come with higher risks, and investors should fully understand the underlying mechanisms and potential risks when chasing returns. Next, we'll cover the latest updates from institutions and projects. An Asian institutional milestone ***. Japanese financial giant SBI Holdings has filed applications for two new cryptocurrency ETFs, one focused on XRP and Bitcoin, and another combining gold with cryptocurrencies. This is considered a significant milestone in XRP's journey toward institutional recognition and regulatory acceptance in Japan. The launch of these ETFs aims to provide Japanese investors with a balanced investment product, appealing to those seeking the growth potential of cryptocurrencies while also desiring the stability offered by gold. This signals an accelerating institutionalization of crypto assets in the Asian market, with more innovative products likely to emerge in the future. DAX, a Korean crypto custodian, has started offering institutional custody support for XRP. This is part of its partnership with Ripple, established in February, aimed at providing regulated access to XRP for institutional investors in South Korea and promoting its global institutional use. Simultaneously, as the Bank of Korea, BK, halts its central bank digital currency, CBDC, pilot project, private financial institutions in South Korea are actively entering the stablecoin market. KakaoBank, a leading online bank in Korea, is exploring stablecoin issuance and custody. These developments indicate that South Korea is forming a private sector-led stablecoin ecosystem, bringing new vitality and compliance exploration to the crypto market. San Francisco-based fintech company Slash has launched a USD stablecoin issued by Stripe's Bridge. This product aims to facilitate cross-border payments for businesses by eliminating the need for U.S. bank accounts and reducing settlement times and foreign exchange fees. This launch comes as the U.S. President signed the Genius Act into law to regulate stablecoin issuers, which is accelerating stablecoin adoption. Concurrently, blockchain fintech company Figure Technology Solutions has confidentially filed for an initial public offering, IPO, with the SEC. The company offers services such as lending and real-world asset, RWA, tokenization through its Provenance blockchain. Both developments illustrate the crypto industry's active integration with traditional finance, attracting a broader range of investors and users through innovative products and public listings. Binance co-founder and former CEO Changpeng Zhao (CZ) has asked a U.S. bankruptcy court to dismiss a lawsuit filed by FTX's bankruptcy estate seeking to recover $1.76 billion. In his filing, CZ argued that his residency in the UAE places him outside of Delaware's legal jurisdiction. He also contended that the relevant U.S. statutes lack extraterritorial reach to govern cross-border transactions. The core of the case is the FTX Trust and FTX Digital Markets' attempt to recover funds they claim were improperly transferred by convicted crypto mogul Sam Bankman-Fried. The outcome of this legal battle will have profound implications for defining liability and cross-border regulation within the crypto industry. Cardano, ADA, has successfully completed its first-ever on-chain governance vote, a moment celebrated by the community as a historical milestone. The success of this event marks a solid step forward for Cardano on its path toward decentralized governance, enhancing community participation in the network's future development. This initiative could attract more investors and developers keen on participating in project governance and serves as a model for the broader Decentralized Autonomous Organization (DAO) sector. China's Ministry of State Security has issued a new warning, highlighting national security risks posed by foreign companies collecting iris data in exchange for cryptocurrency rewards. This warning appears to be a veiled reference to the WorldCoin project, co-founded by OpenAI CEO Sam Altman, which has previously faced regulatory scrutiny in Germany, France, and Kenya. The warning points to potential personal data privacy violations and national security risks from transferring biometric data abroad, and suggests that stolen facial data could be used by foreign intelligence services for intelligence activities. This underscores the complex regulatory challenges arising from the combination of biometric data and cryptocurrencies, as well as the increasing emphasis on data sovereignty and national security by various countries. The tokenized stock market is experiencing explosive growth, increasing by 220% in July to reach a market cap of $370 million, reminiscent of the early DeFi boom. Binance Research predicts that this market could reach $1.3 trillion if just 1% of global equities are tokenized. PancakeSwap is also following this trend, launching tokenized stock futures for major U.S. stocks like Apple, Tesla, and Amazon, offering up to 25x leverage. These products allow users to trade synthetic versions of stocks directly on the blockchain using self-custodied wallets, without needing traditional brokerage accounts or registration. This not only expands the boundaries of DeFi, but also provides crypto-native users with a broader range of investment tools, though high leverage also implies higher risk. Data from mempool.space shows that Bitcoin's Lightning Network's public capacity has decreased from over 5,400 BTC in late 2023 to approximately 4,200 BTC by August 2025, a roughly 20% drop. While raw figures might suggest a contraction, analysts and developers believe this reflects a structural evolution in routing and protocol design rather than a retreat in adoption. A report by River indicates that despite moderate growth in public capacity, routed payments on the Lightning Network increased by 1,212% between August 2021 and August 2023. Following Coinbase integration of Lightning in 2024, approximately 15% of Bitcoin withdrawals on the platform are now routed via Lightning. Furthermore, Tether has announced the launch of USDT over Lightning via Taproot assets, which will allow for USD-denominated payments and stablecoin-backed remittances, effectively decoupling usage from Bitcoin-denominated capacity metrics. This suggests that the Lightning Network is becoming more efficient and diversified, and its true potential may be underestimated by public capacity data alone. Cybersecurity firm Sentinel Labs has disclosed a scam utilizing aged YouTube accounts to promote fake crypto trading bots, which has resulted in over 256 Ethereum being stolen. These fraudulent videos claim to offer free trading bots and entice victims to deploy smart contracts that secretly embed the attacker's wallet. Once victims fund the contract, the scammers can drain the funds. These videos enhance their credibility by deleting negative comments and fabricating positive testimonials, even using AI to generate video content. This serves as another crucial reminder for investors to be highly cautious of any tools in the crypto world that promise get rich quick or easy profits. It is imperative to thoroughly research and validate any tool, avoid deploying unverified third-party code, and be wary of investment opportunities that sound too good to be true. Thank you for tuning into this episode of News Interpretation of Blockchain. We'll see you next time.